All right, welcome everybody. Today I want to explain what a high probability versus a low probability setup will be. Now, I'm not going to be explaining the actual entry setup itself, as everyone has a different model that works for themselves. I'm going to be explaining what a high probability and low probability trading environment is, and when you find a setup, should you full risk or cut your risk, half it, maybe even quarter it. Let's use today as an example. All right. When we got into the charts, I get on the charts at around 9 a.m. I don't like trading before 9:30. 30 minutes is enough time to get my analysis in that I already had before the day, but fix anything that London gave me. I got on the charts, and what do I see? Let's move up time frames here so it's a little bit cleaner. London has a huge range. Since London has a huge range, that's already telling me I am not going to full risk. Just like that. And why is that? Because when London has a full range, we already had the distribution of the day. So accumulation, manipulation, distribution. What's after distribution? Accumulation. So we're most likely to have choppiness, consolidation. Today, we expanded a lot lower, but again, it was low probability. It was a continuation of our distribution from London session. There were no reversals to catch. It was too risky to try to catch a short because we really did not know if we were going to reverse or not in this range. As when 9:30 came, we were already in a discount, and you don't want to short discounts. So again, you can always take a trade if you see your setup, but a big factor is London. If it has a large expansion, you don't want to full risk your trade. Now, this next tip falls under my 9:30 time then price theory AMD model, and that's when price trades into a higher time frame PD array prior to 9:30. Now let me explain that. So let me get my path here. And then I'm going to draw, let's say that's prior to 9:30. And we go like this. Let's say my higher time frame PD array was here. And 9:30 is here. You can catch a continuation. Of course you can. But it's very low probability to catch the manipulation of the day when your POI, higher time frame point of interest, was already hit prior to 9:30. Because what we look for is 9:30 to be the manipulation. If it hit it prior, that means one of two things. One, either the manipulation happened already, or two, that's the wrong PD array and we're going to go higher. Now, you don't know that going into the charts. So what price looks like to you is this. We're here at 9:30. Now, again, we could continue lower and like, oh, here's our bearish Judas. And now I'm going to take a long. And it goes like that. That is why you want to cut your risk when price hits your higher time frame POI before 9:30, as it's pretty hard to catch the high of the day or the low of the day when the manipulation already happened and you missed out on it. So that's two reasons to cut your risk and not fully trade, not fully leverage your trade. Now I want to show you an example of when to fully leverage and when to full risk your trade, not full leverage, sorry. Everyone should have a risk model, right? Maximum I'm going to risk is $250 per trade on a 50K account. And then if I'm cutting my risk, I'm going to trade $100 per trade. When we are above Asian range or below Asian range, I'm going to use this as an example because this was a really clean day, Thursday. Now, Asian range is here. I'm just going to highlight it to give an example. When I get onto the charts at this time and I see that we are below Asian range and London was a small range as well, what does that say? Accumulation, manipulation, distribution, right? Manipulation is, if we're bearish, manipulation will be above Asian, distribution will distribute us below Asian range. Now, this was consumer sentiment. So we also had our little silver bullet model here today. I remember taking this trade. So I'm going to go here. And this is all about adapting to the current scenario that the market plays, right? When there's news prior to 9:30, that is most likely to either be the manipulation, and the distribution. And what do I mean by that is we're going to have a false move and then the distribution. Or we can have a very sloppy mess. Today we had the false move and then the distribution and then the continuation after from 9:30. So 9:30 we had consolidation. Again, this is like AMD, but not with Asian range. 9:30 gives us consolidation because we had the 8:30 distribution. After distribution is accumulation. 10 a.m. brings us the manipulation. Then we have the silver bullet here, which I took the trade. I'll show you guys a picture right now. And then we have our distribution, where we expand a lot higher, right? So this is a full risk trade. We came below Asian. News confirmed bias by expanding higher. 10 a.m. had our manipulation down back into the fair value gap that news created, and then we formed the silver bullet model and we trade higher. That is one reason why you will fully risk your trade. Now another reason, and the last reason to confirm that you're going to fully risk your trade, and that is higher time frame analysis. When the market is playing out just how you expect it, right? We confirm market structure shift at 10 a.m. or 9:30. We expand lower, creating manipulation down into the order block in the fair value gap, and we close way above. It's just playing out how you're calling it. That's a clear sign that you have the right draw on liquidity, and you take the trade. It's all about adapting to the markets, guys. It's all about adapting to what the market plays, playing the right cards. Don't rush anything. Just because the market is retracing lower doesn't mean we're reversing. So many people short here, expecting for these lows to get taken, when in reality, we were retracing. Know when it's going to retrace and know when it's going to reverse. For example, we're in a fair value gap, order block, bodied breaker, consolidate overnight, and we expand back lower to take the lows. And that's our day. Search and destroy. But that's it for the video, guys. I hope you guys found this insightful, and until next time, I'll see you guys later.